All right. What's up, everybody? My name is Arman Vakili. This is Stock Splits, the show where we talk about stocks that split. Super creative, I know. Just in case you did not know what a stock split is, the definition is going to be presented to you. It's when a company divides the existing shares of its stock into multiple new shares to boost liquidity. It also helps with market value, right? So what happens is that the number of shares increase by a specific multiple, and I'll explain what that means, but the total value of the shares remains the same. The total value of your portfolio remains the same because it's not actually adding value, and I'll explain exactly what that means. So the most common split ratios are 2 to 1, 3 to 1, and sometimes 3 to 2, 4 to 1, things like that. And what that looks like is that if you have 2,000 shares, and I forgot to split or change these two numbers, but if you have 2,000 shares and let's say there's a 3 to 1 split, you would end up getting 6,000 shares. Each one of your shares will split into 3, right? So your 2,000 will change into 3. But if originally this is supposed to be 300, so the 2,000 shares would be $300 a share. And if they're $300 a share, when the split happens, they turn out to be $100 a share. And so your overall portfolio value remains 6,000, right? So if it was 2,000 at 300, it would be 6,000. If it's 6,000 at 100, it would be not 6,000. You know what I'm saying? 600,000. Yeah, I think that's what that calculates to. But you know what I'm talking about here. So this is what it means when it actually happens. Now, typically, and I'll show you exactly what it does to a company. This is kind of what's cool about it is that we'll do the case studies. What happens to a company's market cap and the overall performance of the stock, it ends up really like going crazy. So in this particular case study, we're looking at Microsoft Corporation, right? And so they had 9 splits over their history of their stock being public. And the first one was in 87, it was a 2 to 1. Then in 90, it was 2 to 1, 3 to 2 in 91. 92, there was another 3 to 2. And in 94, there was a 2 to 1. 96, there was a 2 to 1. 98, there was a 2 to 1. 99, there was a 2 to 1. And then 2000 was another 2 to 1. So they had a lot of splits like this. Now, the reason why a company would do this is mainly because they know, obviously it's like internal, they feel like, they know that they're probably going to launch some kind of new product, or they're about to go into some kind of a new partnership, or they want the free publicity that comes with making a split announcement, because you get free press with all of the major business platforms and business publications around the time. And so it helps the company get a lot of free advertising, but at the same time, it's actually a calculated move because they're positioning themselves, they're poising themselves to come out the other side of this thing, you know, hitting the ground running and kind of achieving new strides, new heights. And if we were to look at the actual value of this, so we're going to look at the first 4, right? The 2 to 1, the 2 to 1, the 3 to 2, and the 3 to 2. And then we're going to look at what happens after those first 4 and then the significance of the increase in the value of this company as it continues to go on. And then it gets really, really crazy in the late 90s, 2000s, so on and so forth. So let's look at it like this. Next button. Oh, I have to escape and then actually go to the next page. Okay, cool. So this is the actual Microsoft performance all time that I found on Google. It covers from 1986, which was 10 cents a share, and it covers all the way to 2021. And so if we look at our first 4, right, it was 87, 90, 91, and 92. So in 87, where are we at? We're right here. 1987, we're at 40 cents. 87, then we go 90, we're at 80 cents, 90 cents, ooh. And then we go to 91, $1.30, $1.50. That's not bad. And then 92, you're at 250, 246. So if I actually looked at, we look at actual months. So if we do so July of 87, and then we go to July of 90, there we go. So we're at 102. And then July of 91 is going to be 150. And then July of 92, we are at 217, 230. There you go, 230 by the end of July 92. So it went from 30 cents, 40, what is it? 30 cents, 40 cents. It went from 40 cents to 250, right? 87, 90, 91, 92. Okay. So now we're looking at from 92, we're going to go to 2000 and beyond, right? So 92 and then 94, 96, so every 2 years now it seems. So it was every year, yeah. So now it's every 2 years. So 92, 94, 96, 98, and then 99. So 92, July 92, we're at 227. July of 94, we're going to be at 316. So not that much, right? It's still kind of like it's very barely even growing, right? It's almost not even doing anything. So 96, we are going to be at July of 96, we're at 7. So it's kind of making a little bit of a stride here. July of 96, it's at 7. July of 98, it's getting kind of crazy. July of 98, we're at 26 now. This is like the official, it's like the first kind of spike. And this was around the time that the dot-com boom was happening. It was like the first major, like kind of commercialized mainstream tech boom that was happening. So 98, right? $26. And let's go to 99. Listen, there's more and more splits that keep happening, right? 99, $39, $40. And then the dot-com crash. So this was the Y2K crash in 2000 and 2001. So this affected everybody. We also looked at Apple stock during this time. This hit a lot of tech companies. So this is kind of natural. So that crash happened, but it's a behemoth. Microsoft as a company is a gigantic company. So obviously they could weather the storm. And then as you look at it right here, pretty much after their last announcement of a split, it kind of stabilized. And if we were to look at what happened with the market share and the price value of Apple, which we did in the first episode, if you were to look at it during this time, Apple was more of a roller coaster kind of a ride than this like stagnant line until it got to the latter years around 2014, 2015 when it started really spiking back up again. And then now they're at $230, their peak in 2021 was $245. So they got to $245 per share. But the performance of it ended up being relatively stagnant. Now here's what's really interesting with this whole thing. So the performance of the stock seems to be very relatively stagnant. But if we look at the market cap from this period, so from 2006, which is $27, right? And even up until 2016, let's say, which wasn't even, let's say 2014 kind of. Like it was still barely gaining a little bit. This is not that crazy of a return or any kind of an interest. So now you look at the market cap, okay? So the market cap is $270 billion. And by the way, at the same period, around the same time, just to give you a comparison of how large of a company Microsoft was and is, at the same period, Apple's market cap was $26 billion. And this is $277 billion is what Microsoft's market cap was, okay? This is how giant of a company it is. And even though the stock price seemed to be pretty stagnant, what ends up happening to their freaking market share ends up becoming like this is drastic, you guys. When you see spikes like this happening and a company ends up growing, and then we obviously can look at the historical purchases and the partnerships and all of the different things that Microsoft Corporation and Bill Gates as an entirety ended up doing and all the different ventures that they got involved in to give them this kind of a boost. But it was the smartphone era and a lot of the computer development. And I mean, a lot of the stuff that's within Apple products and Apple computers is developed through Microsoft Corporation. A lot of the actual hardware that they use in a lot of products. So these guys actually cross over. It's kind of incestuous almost. But when you look at the market and see, this is where it gets kind of crazy. So in the last 2 years, in the last 3 years, they went from 700 billion to over almost, what is it? Is that two? Not yet. It's $1.8 trillion, okay? That's the Microsoft market share. You got to understand, this is insane for a company's market share to be $1.8 trillion in an era where all of these different tech companies that were launched and they came out as independent companies and Chinese companies came, and there are so many different tech companies that were launched over the last 5 to 10 years. And for a company to be able to maintain this kind of market share, and then you even look at the spikes, not the spikes, excuse me, but the corrections that happened within the stock itself, and this was the pandemic correction that happened. And if you look at the Apple video that we did, It's literally the same exact trend that happened with the Apple stock. And I mean, I can look at every other company stock as well, with the exception of a few companies that were in financial services or a few companies that were able to make the virtual world actually work for them. There was a few companies that were able to do that. Everybody else took this hit. So even with this hit, look at the recovery that happened to this company. You look at the hit that happened in 2018, same thing that we looked at with Apple, and there was another one. And so you see all of this little hit that happened with 2016 that happened to Apple. If we wanted to go back to 2008, this drop that happened, this was all something. So these are all corrections, and the patterns are so almost identical to every other stock because there are certain things that they just can't avoid. But the ability for a company to be able to recover from situations like this is what makes you look at it. And if I were you, and if I found a scheduled stock split date for Microsoft, I would put it on my calendar, and I would make sure that around that time I look at the stock, and I'm not a licensed advisor, right? Go speak with a licensed advisor, all of that stuff. So I want to make these disclosures, but for me, for myself, that's what I do. That's what I'm going to do. I'm going to look at the scheduled stock splits for all these different companies and the companies that I'm going to share with you guys in future episodes. And then if I see that their market value is this high, and if I can see that they've been in business as long as they have, and they've weathered all of these different storms, then it's probably a strong company for you to consider buying if you're planning on buying and actually staying within these markets for 5, 10, 15, 20 years. It's going to be something that is going to do well for the next, especially in the tech space, right? Because these guys, Apple, Microsoft, Facebook, we're going to talk about all these different tech companies. These guys are trying to stay within the scope of the evolution of technology as we go to virtual, as we go to augmented reality, and everything else that's happening. These guys are trying to stay within all of those scopes and stay relevant. So you know they're going to be around 20, 30, 40 years from now. So these are things that I look at when I consider certain things that I would want to purchase and invest my money into. And I would recommend that you do a tremendous amount of studying and amount of due diligence before you do something like this for yourself, and even consult with a licensed advisor if you can. But this is something to consider, right? This is like, it's almost a hack, dare I say, because when you look at the performance of most of these companies after they've done splits, you can see what happened to their market share, and you can see what happened to the value of the stock. So all of that to say, this is what a stock split looks like. And this was our second case study. So I'm very interested to hear what your questions are. I'm sure that this conversation can ignite a lot of curiosities within people. So I'm very curious to see what your questions are. I want to see what your comments are, and I will address them in future videos. And we just want to make sure that you actually get the most out of this. And hopefully it's an interesting topic for you guys to actually see. So my name is Arman Vakili. This was the Stock Split Show, and I will see you guys in the next episode.